Hello, I'm Chris Van Hart, and welcome back to your weekly market update. Let's get you caught up on what moved markets last week, what's on deck for the days ahead, and a quick financial planning tip you can use today. Markets are kicking off the week with a relief rally. According to Bloomberg, oil, bonds, stocks, and gold all gained after the US and Iran refrained from further strikes, easing tensions that had been rattling markets. Yahoo Finance reports that U.S. stock futures surged Monday morning as oil prices tumbled and the U.S. suspended its 13-night airstrike campaign against Iran to allow room for diplomacy. And Benzinga adds that a senior Iranian official confirmed Tehran would also pause retaliatory strikes as long as the U.S. holds off. On the data side, Benzinga also notes the 10-year Treasury yield sits at 4.64%, with the 2-year at 4.3%. And CME FedWatch pricing is roughly at 68.5% chance the Fed holds rates steady at this week's meeting. And per CNBC, last Friday, the S&P 500 closed nearly flat. The Nasdaq fell 0.64%, while the Dow gained 0.46%, boosted by a jump in Apple shares. This is shaping up to be one of the busiest weeks of the quarter. Kiplinger reports the Federal Reserve's meeting is the headline event, with the rate decision and Fed Chair Kevin Warsh's press conference landing Wednesday. Light Finance's economic calendar shows that the same day brings German and Eurozone GDP, US GDP, US PCE inflation data, which is the Fed's preferred inflation gauge, and Japan's CPI. On the earnings front, CNBC notes Amazon, Meta, and Microsoft report Wednesday and Thursday, with Apple and Qualcomm also posting results this week. After disappointing spending commentary from Alphabet rattled megacap tech last week. And rounding out the calendar, FX Street lists ADP private payrolls on Wednesday, weekly jobless claims and Chicago PMI on Thursday. Friday brings non-farm payrolls, the unemployment rate, and ISM in manufacturing PMI. With the Fed decision and a wave of earnings hitting this same week, expect volatility. My tip, resist the urge to react to daily headlines. If you're dollar cost averaging into retirement accounts, stay the course. Trying to time entries and exits around Fed meetings or earnings prints tends to hurt long-term returns more than it helps. Use weeks like this to rebalance toward your target allocation, not to make emotional bets. That's your week ahead. Stay informed, stay diversified, and we'll see you next week. I hope you have a great day.